Good morning, everyone, and happy Saturday. Andy Tuttle here with the Tuttle Group at Fairway Mortgage with your weekly DFW mortgage market update. And just want to remind you, we do this every week just to make sure you know what's going on with the markets, how that affects interest rates, and how that affects you when you're looking to buy or sell a home. So we're right in the middle of it. We are seeing some good statistics actually this week that showed strong housing starts. That's new construction. That makes up about 10% of the market, and new starts were up about 11% year over year. We had housing permits, which is a good future indicator of housing starts, up about 7.5%. We had the initial jobless claims numbers come out this week, and this is the sample week used in the BLS report, which is the report really looked at heavily by the economists and the Fed, etc. And that was under 300,000 jobless claims for the 124th week in a row, which is the best in 47 years. So our jobs outlook is continuing to improve modestly, and again, best in 47 years is a great indicator. We have housing starts up, and we have inflation, at least from what the Fed statements were last week and from some of the Fed chairs and even Janet Yellen, I think it was last week, a couple weeks ago, discussing that it is still in check. So we don't believe that next week when the Fed does their rate decision that they're going to hike. They'll probably save that for the September meeting. And all of this is translated to a nice little rally in bonds. In addition, we've had stocks this week kind of falter a little bit, in which they need a breather after all their big, crazy, record-breaking highs and new daily highs and all that. So that's also helped bonds, and so that's good for you. So what we've seen the last couple of weeks, when we go to the charts, is that in the last 10 or so trading days, we've seen a good improvement in interest rates in price. So rates have lowered about 1/8 to 1/4%, depending on your specific profile on the property and down payment, etc. But overall, we've seen that improve. And for those of you that don't have a contract right now, most of you guys that watch this are looking for a home right now. We are in a carefully floating position. We've got a little bit of improvement here. A little white space that you see here is room for improvement with before we hit our next ceiling of resistance, which is this right here at 103,200 on the bond price chart. Remember, this is mortgage-backed security chart, so the higher the price, the lower the rates. And we crossed over this significant 200-day moving average again. You can see we battled that before, and we didn't successfully hit it. Now we're battling it again. We've closed above it and a few other lines of resistance, so that's good. If we can continue this through next week before the Fed meeting, we've got a good chance to see some improved rates in the short term for the next week or so. So we're excited for you. If you're out there, it's a great time. If you got pre-approved, really, anytime in the last couple weeks, you've probably seen some improved rates when you get your contract. If you got improved, back in June or May even, you're going to be pleasantly surprised that your rates are probably similar to when you got quoted there. So you should be in a good spot right now. Get out there, make some offers on homes, have some fun with it, get competitive, and let us know how we can help. Have a wonderful weekend. Happy hunting, and we'll talk to you soon.